So let's dive into a really fascinating market mystery. While everyone was mesmerized by gold shooting for the moon, somebody was quietly, almost secretly, selling off silver. And who was doing it? Well, that tells a much bigger story than you think.
You couldn't miss it, right? The headlines were everywhere. Gold hits another record high. Central banks are snapping it up. It was the star of the show, no doubt about it. But, and this is the big twist, while all eyes were on gold, something else was happening in the background. A different story entirely. Silver was being sold. Not in some big, loud panic, but quietly, methodically. And that quiet signal? Honestly, it tells us a whole lot more than gold's flashy rally ever could. And that brings us right to the heart of this whole thing, what I'm calling the silver signal. See, silver isn't just some other shiny metal. It's a really powerful economic barometer. Think of silver as having this split personality. Yeah, on one hand, it's a money-like asset, a store of value, just like its big brother gold. But on the other hand, it's a supercritical industrial metal. It's in everything, electronics, solar panels, you name it. So it lives right at this really interesting and sometimes kind of dangerous intersection. And because it plays both these roles, its price is just incredibly sensitive. It's like a finely tuned instrument. It reacts like instantly to any little shift in what people expect for economic growth or changes in the money supply, big policy announcements, and especially, any whispers about trouble in global trade.
And right here, this is the key difference you got to get. Gold reacts to the fear of a complete system meltdown, a total crisis of faith. But silver, it reacts to something more subtle, the expectation of a slowdown, a crisis of future demand, totally different triggers.
Okay, so for our investigation, there's only one thing to do: follow the money. Let's figure out who exactly was behind all this quiet selling.
That's the million-dollar question, right? If this wasn't just random noise, if it was deliberate and strategic, who was pulling the strings?
Well, first, let's talk about who it wasn't. It wasn't your average retail investor. Retail tends to panic, a little late in the game, and they make a lot of noise on the way out. This was the opposite. This was quiet, methodical. This had all the fingerprints of institutional positioning. We're talking about the smart money, the folks who trade on where they think the world is going, not where it is today.
And who are these players? Well, we're talking about the real heavy hitters, the commodity desks at the big banks, huge macro hedge funds, even large industrial companies that use silver and are trying to hedge their future costs. And of course, traders who are hypersensitive to the flow of money in the financial system. And here's what's so important to understand. These guys weren't just looking at the price on the screen and hitting sell. No way. They were reacting to really subtle policy signals. The chatter about new tariffs, friction in global trade, hints of stress on supply chains, all that stuff is a direct threat to the industrial demand for silver. Okay, so this all leads us to the big aha moment, the big reveal. We're looking at what seems like a tale of two completely different metals, but actually, they're telling us one single coherent story.
Now, this is the part that trips a lot of people up. You're probably thinking, wait a minute, if the smart money was dumping a precious metal, why wasn't gold falling too? It seems like a total contradiction, right?
But it's not a contradiction at all. Let me break it down. Think of it like this. Gold is all about trust. Trust in money, trust in governments, trust in the whole system. When that trust starts to crumble, gold goes up. Silver, on the other hand, is all about growth, specifically how clear the future is for industrial demand. When that future gets cloudy, when that demand erodes, silver goes down. So yeah, they can absolutely move in opposite directions.
And you know what? That split, that divergence, that's actually the most important part of this whole story. It isn't just random market noise. It's a clear, loud warning signal.
And we can actually see the proof in the data. Just look at the money flows for ETFs. While money was still steadily flowing into gold ETFs, you see this light but really consistent flow of money out of silver ETFs. So this wasn't a sell all precious metals panic. It was a very deliberate rotation, a move away from things tied to the economy and towards pure safety.
So the signal from the big money, when you boil it all down, was basically them saying, you know what, we don't really want a lot of exposure to the industrial economy right now. It's a textbook defensive play. Okay, so what does this all mean for you? What's the bigger picture here? Let's connect these dots from the metal market to the economy as a whole. If you look back through history, there's a really clear pattern that plays out. Step 1, silver starts to get weak because those expectations for future growth are starting to fade. Step 2, gold holds its ground or maybe even climbs as people look for a safe haven. And then, step 3, and this is the important part, it's only after that that the rest of the market, stocks and other riskier assets, really start to feel the pain.
And that is exactly why we call it the silver signal. It's like an early warning system. See, it doesn't wait around for the bad news to show up in some official government report months later. It reacts to the chance, the probability that the bad news is coming.
All right, so let's bring this all together. What's the one big takeaway you should walk away with?
Look, the real story here isn't, oh, silver is weak. That's missing the point. The real story is that big money is making a choice. It's choosing safety over growth. It's a migration of capital from playing offense to playing defense.
And that's really the most crucial lesson here. The most important things happening in the market aren't always the big, loud stories on the front page. Often, it's the quiet, deliberate movement of money happening just under the surface, while everyone else is distracted. So I'll leave you with this to think about. Gold tells you how much fear is in the system right now. Silver tells you what the smart money expects for the future. In a world this noisy, with so many distractions, which one of those signals do you think is more valuable? Which one are you watching?